Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 1st of April, 2020. And as promised, this is our daily market news update. The time currently is 1900 hours GMT plus 1. And so, whilst UK and European markets have now closed, the American markets are still open. So let's take a look as to what's been happening today. The Euro Stoxx 50 index closed down 106 points, or 3.8%. The FTSE 100 index closed down 217 points, or 3.8%. The Dax Index closed down 391 points, or 3.9%. It's getting worse. And the CAC 40 closed down 188 points, or 4.3%. Now, currently, the Dow Jones is down 794 points, or 3.6%. And we have to admit we think it might go down a little further. The S&P 500 is down 105 points, or down 4%, and the Nasdaq is down 275 points, or 3.6%. Now, for those of you who thought that equities were on the route to recovery, we would like to refer you to two videos that we produced on the subject. The one entitled, Will Cash Pour Back into Equities Soon?, which was published on the 29th of March, and the other, Have Equity Markets Already Bottomed Out?, which we published yesterday. And you'll get a good feel for what our thoughts on that matter were. Now, currently, Brent crude is down today by $1.40 at $24.95. And WTI crude is actually up 0.16 at $20.64. The dollar index is also up today, again showing some quite considerable strength, up 0.6 at 99.7, again looking to test that 100 mark. And frankly, it might just make it within the next day or so, but a lot depends on the economic figures being announced tomorrow and Friday. Now, gold is up just $1 so far today at $15.85, but having reached $16.01 a few hours ago. Silver, though, is currently down 14 cents and has fallen below the supportive $14 level, as we suggested it would yesterday in our updates yesterday evening. Silver having been as high as $14.18 today, and as low as $13.84. Now, in sterling terms, gold is up £4 at £1,278, and silver is down 9 pence at £11.23. In euros, gold is up €12 at 1,450 euros, and silver, though, is down 0.03 euros at 12.75 euros. Now, gold, interestingly, seesawed a little today between its high of 1601 and its low of 1572. Not a dramatic spread, to be fair, but looking at the chart, it really does not know in which direction to move. We mentioned yesterday that we were expecting consolidation, and this is exactly what appears to be happening, with the $1,600 level being tested, but for the moment is presenting some resistance. That said, we are expecting a clearer direction on Friday, particularly once the non-farm payroll report has been announced. Now, there is no doubt in our minds at present that the dollar strength is keeping a lid on gold for the moment, and unless the dollar weakens considerably, gold is likely to remain range-bound, unless some unforetold or unforeseen event occurs. But what is also arguably weakening gold today is the announcement by Russia that it is temporarily ceasing gold purchases. And this, of course, is having a dampening effect of some sort. The magnitude currently is difficult to assess, especially when one bears in mind how much gold Russia has purchased in recent years, and in particular when you actually consider the relative small size of their economy. So pro rata, they have been a major purchaser of gold. So a high dollar and a little adverse news on buying sentiment will keep the lid on gold and potentially push it a little lower. But again, for now, we're really not concerned, and again wish to see what the economic data being announced later in the week reveals. Now, silver markets have reined back and frankly are struggling, and has fallen below that psychologically important $14 level. And if it holds below there, then we can expect a quick move towards $13.50 and then possibly down to $13. We were bemused to listen to some channels bemoaning the performance of silver and how disappointed they were with its performance. Well, without appearing to be bragging or boasting or even a tad arrogant, and we really are not, perhaps they would be less disappointed if they actually followed our channel rather than the pumpers they love to interview and praise, all telling you that silver and gold are going through the roof. You see, in an economic slump with worse to come, it really does not take an economic genius to work out what is likely to happen to silver prices, certainly initially. And that's whether the price is based on paper trading or on physical demand and supply. Now, the ironic tragedy, of course, though, is that one cannot obtain silver at these low prices, not the physical, because where the silver is currently located cannot be shipped to where it's required. And equally, no one has any in their stores because of relatively low inventory levels, because, to be candid, even the dealers are mints that there is so much supply above ground, they can always order it in reasonably quickly. So, whatever you do, please do not be fooled into buying silver at huge premiums like $10 or more over spot, as we will take no pleasure in saying to you, in 4 or 5 months' time, told you so. If you cannot get the physical and you feel the price is bargain basement, then paper trade it, or SLV it, or bullion vault it. Yes, there are counterparty risks, but there are also fiduciary and legal protections too. We have no doubt that silver is currently trading cheaply. However, we do have some doubt if you're paying $10+ over spot, whether you will make a profit over the next 6 to 12 months. Now, on the economic news front, the ADP employment figures were quite poor, at minus 27,000 jobs in March, compared with plus 179,000 in February. We are expecting even worse figures for April. The market manufacturing PMI for March was down a little at 48.5, but compared with 49 in February, it's quite a decent result. But again, we're expecting worse figures in April. The ISM Manufacturing Index for March came in at 49.1%. That's 1% lower than February, but 5% higher than expectations. Construction spending for February is positive, 1.3%, against January's 2.8%, but against expectations of 0.7%. So a mixed bag really, but the jobs report is a forerunner of what we can expect on Friday. Of course, perhaps more up to date will be tomorrow's weekly jobless claims, and they are not expected to be good by any measure. Now, yesterday we commented, quote, "For those thinking of investing into the equity markets again, whilst we do not think this is quite the right time, we also do not think that the right time is that far off either. For the savvy investor, the 14% fall in the Dow over the last 12 months, but the 25% fall in the last couple of weeks, should it reduce further, could indeed provide a more interesting opportunity for the brave who can then afford to wait and hold for a while." Now, we're still of this opinion. We need to see equities fall further before being tempted to buy back into that market again, especially as the economic news from Europe continues to disappoint, with, for example, French passenger car registrations actually dropping some 72% in March compared with the previous year, and Spain's new car registrations falling by 69%. Now, according to Bloomberg today, quote, "It is very likely that new car and truck sales will have to take the biggest hit since 1945, unquote. Jürgen Piper, an analyst at Bankhaus Metzler, said in an email. And German auto parts maker Continental AG withdrew financial guidance for the year and said more than 40% of its plants have shut. About 30,000 employees, or half of its local workforce, have been registered for state wage support and shorter working hours. Now, of course, car manufacturing is just part of the overall manufacturing malaise, and it will take some time to rebuild. And this still has to be fully reflected in equity prices, which we don't think they are currently. So, the news for gold and silver, though not poor, is also not that bullish currently. But as we're all aware, to quote a famous British saying, it could all turn on a sixpence. Or for the benefit of our US listeners, it could all turn on a dime. We've published this morning a video on the Richard and Greg channel, where Greg and I debated last night if the Brexit negotiations are likely to be delayed, forcing the UK to stay within the EU beyond the 31st of December. You will no doubt be surprised, or should I say, you will no doubt not be surprised by Greg's reaction. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting to also do the same on our Richard and Greg channel. So until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.